Welcome back to another session of the weekly forecast. This is going to be for the week of 2nd of December to 6th of December. It's NFP week and we have a lot of rate for the news drivers in this particular week. Probably they're trying to get things done prior to the holiday season, which is on the 4th week of December. So starting off from the monthly chart, TLDR, I'm still bullish. I'm looking for the monthly highs to be attacked. This is probably a six sister concept whereby you have Nasdaq being the one that is lagging behind. It is going to follow through with S&P 500 and YM to continue to push higher. That is what I'm assuming. And that's it. You can close the video now if that's what you want. Okay, so heading down into the weekly time frame, we can see that we closed near the highs of November. So let's just say if we take out the highs first in the first 2 weeks or the first week, I'm gonna anticipate retracements. That is very logical because every candle has a premium week and a discount week. There's always a manipulation before the distribution. So if we attack the highs first, then obviously we're going to shift lower, and that is going to be manipulation because we're still bullish overall. After that manipulation, then it comes with the real distribution. So it's going to take out both sides of the marketplace, and the overall condition for next week, to me, it's a 50-50 because we are very near to the highs and we are bullish. It's not something that I would like to see if I'm looking to trade higher, because if I'm looking to trade higher, I would love for price to be near the low when it opens, so that you have that expansion, you see. If not, it's just going to be very hard to hop on the bus, so to speak. So for example, when you're looking for really bullish expansions and a large range expansion, you would like to see opening prices, like for example in this candle here, 9th of September, you want to see price open near the low, and then from S&T. Right, this is not cherry picking by the way, but you can just backtest it. It always happens, right? So just wait for S&T on the lows, and then you get this huge expansion. So without the price opening near the lows, you will not get this huge expansions. You're going to get this type of candles here, like opens, drop a little bit, go higher, comes back down. Right here as well, opens, drop a little bit, go higher. If you're trading like for scalps, it's good because you're basically trading power of 3 on the daily candles, and you can capture the daily range, but you just wouldn't be able to capture such a large move. Right, so if you take a look at the sizes of the candles following this particular candle, you can see that they are way smaller. They're so much smaller than this candle up here. Similar to this candle as well. If we were just to take this level here, lower low, higher low, lower low, lower low right here. So SMT again, and then because it opens near the lows, look at the expansion of this candle. And then when the subsequent candles forms, right over here, opens near the lows again, taking out the previous candle's low. Right here we didn't have any SMT between the three, and you can see that the expansions are smaller. So when they are when there are SMTs, expansions tends to be larger, and if there are higher targets right here, like for example right here, because it opens up right here. Okay, so from here to here, there's targets, but from here to here, this is the only target that you have, and above that it's all-time highs. Similar for ES as well. From here, your target is up here, and you can plot the standard deviation, but from here your target is only up here. Of course, you can go down to the lower time frames and refine your setups and your frameworks, but this is something to consider as well, right? On highs, like for example this week right here, we open up near the highs, we took out the highs. Okay, this is the all-time highs previously. Yep. So if you take a look at this candle here, 8th of July, we traded above the previous candle's high, which is the all-time highs, and the size of the candle is smaller than the previous one. That's number one. Number two, for all-time highs, you get the risk of such a retracement or a short-term reversal, and then price just run through all the bullish PD rays. So this is the risk, which is why I said, which is why to me next week is 50-50, because this can happen due to one simple factor, which is we're opening up near the high. Alright, so even though I'm bullish, my overall bias is bullish, I don't like it when the candles open up near the highs, because that would mean that I'm most likely not going to be able to take any swing trades, which is usually the easiest to take, in my opinion, to take out the daily range. That is the easiest, and for personal life accounts, you can take it for the weekly range expansion, which can yield a higher reward with a lower risk. I mean, I shouldn't put it that way, but it's much more enjoyable to trade that way, because you don't have to be on the charts all the time watching the minute tickers. But this is just me. Everybody has their own trading styles, right? But anyways, that's pretty much it for this week's forecast, this week's session, and good luck trading next week. I'll talk to you again. Hope you find this helpful, by the way. And yeah, enjoy the last month of the year.